It's a pleasure to be here in NCAR this afternoon. A special word of gratitude to Mridul for insisting and showing the patience to drag me here. I was here just last week, so I was thinking coming to Delhi in this weather more than once a month is a bit of an ordeal. But then I couldn't say no to Mridul. Before I start off, since I have a flight, I'll try and be there throughout, but since I have a flight to catch, in case I'm pressed for time, I might have to leave a little early. I seek my apologies in advance. The loss will be entirely mine. Global FINDEX database has always been, as Mridul said, perhaps the most comprehensive database on financial inclusion. Its coverage in terms of countries, its coverage in terms of variables, its coverage in terms of indicators, its coverage in terms of time is unparalleled. So that is the document that most of us look to if we really want to understand or find information about financial inclusion anywhere. And the latest version, the 2021 version, which Mridul said came out in 2022, is no different. It is as comprehensive as the earlier ones. Kudos to the authors for bringing out such a detailed document. It documents all global trends, global reports with sufficient detail in country-wide micro factors that go into financial inclusion and, in this case, digital payments. In particular, I think what the theme that appeals to me in this report or this database is that it very clearly shows how digital payments, digital technology can make us reach or make us achieve financial inclusion, higher and higher levels of financial inclusion, that much more easily, that much more effectively, that much more efficiently. I had a look at the report, and some of the basic data that comes out of the report clearly indicates that digitization or digitalization, whichever word you prefer, is proceeding apace globally. Some countries are doing better, some countries are not, but as a category, whether it's developed economies or it is developing economies, digitization in the sphere of payments particularly is growing at a stupendous rate. The basics for digital payments is essentially having an electronic or digital account. The first thing that is brought out in the report is that the number of formal accounts has doubled in terms of adults to 76% over the last 10 years. Now that doubling in 10 years, given the level of digital awareness, given the level of, let's say, technology savvy in various emerging economies and developing economies is a great achievement. And the fact that 57% have made digital payments from these accounts, in other words, these accounts are not just lying idle. There are, of course, other data points which says that they can be used more. But a large part of these accounts are used for digital payments, either receiving or giving out payments. And this number has gone up from roughly, I think, about 35% in the last 2014. I think it says so last about 7 years. So, which again is a clear indication of the digital growth that we are making. A point that comes out very clearly is that a large number of accounts have been opened, about I think 40%, 39 or 40% of these accounts have been opened on account to facilitate government payments. Now that is an important point, that comes out while personally, while I was aware the role that government can play in universalizing formal financial accounts or bank accounts, this report clearly brings out that it can actually play a pivotal role in it. Now we know that, in a sense, we in India know that the Jan Dhan Yojana that we have, under which roughly about 460 odd million accounts have been opened so far. And the fact that most fiscal transfers are made into these accounts, probably India has a lot of contribution to make to these very high numbers, but this is something that not only we have to learn and try and maximize the payments, government payments through these accounts, but globally there is a learning point here. As far as the coverage of India is concerned, it reinforces the sense of achievement in our efforts that we have made, that government has made, that Reserve Bank has made, in the initiative that the private sector has shown, whether it is startups or technology firms or banks or non-bank payment system operators. It reinforces the fact that we are proceeding in the right direction. Especially the jump in the digital payments during the pandemic actually, makes that a dividing point. There is a before and after in pandemic. There's a before pandemic and after pandemic in terms of the use and popularity of digital payments. I think the report tells us that about 800 million people, now, that's more than 60% of the population, about 800 million people made their first digital transaction during the pandemic period. The report also reminds us that there is the task ahead is still massive. It is still stupendous. While our growth has been impressive, what we have to achieve is clearly brought out in the report. Globally, the report says about 1.4 billion adults are unbanked. And I was having a look at the distribution across a map, and the largest circle was banked right in the middle of India. 17% of the adults here are still not banked, and that is the largest in terms of percentages. So there is some task for us ahead. The interesting data I saw, of which I had no idea, was the gender distribution. While there is no gender gap in terms of account ownership, there is a huge 17% gender gap in terms of using those accounts for digital payments. Now, there is a learning somewhere here. This is the data that we need to look at. This is the data that we need to understand the policy implications of, and this is the data that we need to use going forward to bridge this gender gap. Briefly, at the Reserve Bank, we focus on digital payments in a fairly systematic manner. We have periodic vision documents that come out. They have started coming out from the early parts of 2000s. We bring them out every 3 or 4 years. The idea is that this document not only conveys the objectives and the tasks that Reserve Bank has set for itself in the next 3 or 4 years, it also provides clarity to all the stakeholders. And given the fact that we depend immensely on the private sector, on the initiative of the private sector in developing products, in innovating products, and in generating businesses that would enable us to achieve our policy objective, while the private sector obviously achieves its own objective of whatever, profit maximization, which is exactly as it should be. That clarity, I believe, is provided in these vision documents. There is a national strategy for financial inclusion. Many of you would have seen it, given the context here. Both the documents put together basically talk about RBI's objectives, its strategy, and its policy tools for financial inclusion. I will start with a brief account of how far we have come in terms of digital payments. Over the last roughly 5 years, calendar years 2017 to 2021, digital payments in volume terms have grown at about 44% per annum. In value terms, they have grown slower at about 6% per annum. Daily transactions have grown from about 40 million at the beginning of 2017 per day to 290 million on last count, that is for August 2022. So that's more than a 7-fold increase in the number of transactions every day. A large part of this is obviously contributed by UPI and its popularity. That's a topic most of you will be familiar with. That's probably an app most of you who are here are already using, so I won't get much into that. But that number has gone up, and this is captured in the Digital Payments Index that we have. We started it. Base was 2018 March, which was 100, and now as per March 2022, that number is 349. So that's an increase of about 250%. Simultaneously, the Financial Payments Index, these indexes have been developed by the Reserve Bank to give us a sense of where we stand, what lies ahead, and over time probably learn to refine these indexes so that others can also follow it if it's useful. The Financial Inclusion Index stands at 56.4 in March 22 compared to 2017. It was 43.4. So there has been an increase there. That number reaching 100 means perfect financial inclusion, 100%. Reserve Bank also undertakes benchmarking studies of various indicators of digital payments. We have done it once. We have recently put out the second report. As per the second report, India is a leader. By leader, women placed either at 1, 2, 3 at the top. India is a leader in 15 out of 40 indicators that are there. So that is why, apart from the fact that it's something we have brought out, that gives us clear visibility of what are the targets that we need to focus on and where do we need to move to achieve, achieve a goal of, a fairly efficient digital payments ecosystem that is accessible to all. As you know, India is one of the few countries where the RTGS system is 24/7. The NEFT system has also been made 24/7. This has made a big contribution. Apart from the fact that these payments are available 24/7 and throughout the year, it has made a big difference to in collateral areas. For example, it has enabled Indian banks to operate globally and settle immediately. Now that facility, simultaneously with financial market regulatory initiatives like accessing NDF markets outside or allowing non-residents to access domestic market makers, the availability of the payment of the RTGS system has greatly facilitated that. It has greatly facilitated government payments during, I remember during the pandemic. In one day, we made payments that normally without digital would have taken probably months to achieve. So, it has enabled those direct benefit transfers of the government. It has also, one of the factors that goes under the carpet is that it has substantially reduced the settlement risk in the financial system, where we used to have 2 or 3 or 4 settlements, and all these settlements underlie either UPI or NEFT or any other payment system. While I send money to my friend, the money reaches immediately. The settlement doesn't happen immediately, and the settlement or settlement finality happens when the banks transfer the money to each other, and that transfer is reflected in central bank money. In other words, it takes place in the RBI books. Now, these settlements happen periodically, and the longer is the time gap for these settlements, the bigger is the settlement risk in the system, and therefore having more settlements, which was made possible by RTGS 24/7, that risk has gone down. Other areas are, of course, bill payments. There are about 20,000 billers who are registered on the Bharat bill payment system. Recently, we have announced, and probably Dilip can give you an update on that even non-resident Indians will be able to pay their bills from outside on this system. There are, about 7 million POS machines, and roughly about 200 million, QR codes have been installed. Roughly about 14 million of these have been covered under the Payment Infrastructure Development Fund, which is a sort of subsidy to facilitate entities to set these up, targeting, among others, let's say street vendors, even in the metros. So that that payment infrastructure is in place. There are about 1.6 billion prepaid instruments that have been issued. So overall, the numbers clearly indicate that we are progressing well. We are progressing in a reasonably satisfactory manner. I will go forward to see what are the other things that, what are the things that are missing, what are the things that we will need to focus on. But before that, this growth has been made possible because of various factors. First is, of course, the role that government has played. The fundamental requirements, the basic requirements of digital payments is 1, a device, 2, you need a bank account, 3, you need identity or authentication, and 4, you need connectivity. Now, the first 3 of these, bank accounts, cell phones, so mobile phones, or identity, are all taken care of by the government in perhaps a system that is unparalleled anywhere in the world. We call it the JAM Trinity, Jandan, Aadhaar, Mobile, but the role that it has played is something that can never be undermined. In this, and government is already making huge efforts to ensure that there is universal connectivity. So in terms of basic requirements for payment systems, government has put those things in place. In addition, of course, is the Payment and Settlement Systems Act, which was introduced in 2007. That provides a firm legislative base for Indian payments and settlements. So providing the legal basis, giving the basic infrastructure in terms of account identity has been taken care of by the government. On its part, RBI has sought to introduce a regulatory framework that creates and reinforces the enablers. Those were the basic requirements, accounts, mobile, etc. The enablers are interoperability, security, cost efficiency, and digital literacy. So RBI's efforts over the years has been to ensure that these enablers all are strengthened throughout the system. To begin with, RBI has, like in many other areas that RBI has done, whether it's agricultural finance, or whether it is, whether it is financial markets, RBI has, throughout its history, been creating institutions that have played a transforming role in their respective areas. In the area of technology, in the financial system, it has been no different. The first to come up was the IDRBT, which is the Institute for Development and Research in Banking Technology, followed soon after there by the Clearing Corporation of India Limited, and after that by the National Payments Corporation of India, NPCI. We all know the success that it has had. There are other organizations not as visible perhaps, like IFTAS or Rebit, which have also played an important role. So one of the things RBI does is create an institutional framework that takes care of the basic dissemination or basic spread of the enablers that would keep a digital payment system up. To enhance security, which is the other thing of the digital payments, which is an important factor insofar as it can draw people who are suspicious of technology, who are suspicious of digital transactions, to bring them into the fold of digital payments. RBI has taken some important measures. The first that comes to mind is the two-factor authentication, which probably has played the most important role in improving our confidence and reducing the misuse of this system. Notwithstanding this, other problems do take place. There are social engineering and other types of frauds that happen, but those numbers are, in relative terms, well under control. Those numbers are quite low. realizing the role that technology plays in this, RBI has again taken initiatives. For example, setting up the Reserve Bank of India Innovation Hub, doing cohorts under the regulatory sandbox mechanism, and taking steps like the hackathon. We recently had a hackathon earlier this year whose results were announced, and some of the solutions that have come up in that hackathon, and I believe some of them are already being implemented, are mind-boggling. So the basic idea is that in India, we have the willingness of the government. We have created the ecosystem. We have a regulator who is also looking at development. But quite importantly, we also have a private sector, technology firm, startup ecosystem, which is willing and which has the skill and which has the drive and the creativity to provide products, to provide solutions to various use cases of social importance in a manner that it meets their requirements, it meets society's requirements. India's economy, as all of you know, is largely bank-led. So banks are right in the forefront of digital payments as well. I'm fond of saying, I've told that in other places, that a digital transaction essentially is basically a movement of money from one bank account to the other. So it is not possible to, at least, not the way the financial architecture has evolved, it is not possible to have a payment system without banks playing a major role. But at the same time, while banks are at the forefront of this digital payments infrastructure, we have also tried to develop non-bank payment system operators, which have played a great role. If you look at UPI, more than 80% of those transactions are accounted for by just 2 entities. Now, it has other issues like concentration and how to address that. But but apart from that, that role and the role that a large number of payment system operators have played in giving out wallets and coming up with solutions has been one of the major factors that has bridged the gap between what banks provided and the last mile, which can reach customers which are outside the pale of banking. Significant spread of banking habit and digital payments notwithstanding, as the report has flagged, there are certain challenges that we would need to address. One of the key findings of the report is that the large section of the unbanked population in India now has bank accounts, but a significant proportion of these are of inactive status. Now, as per the report, in India, the distance to financial institutions, the lack of trust, lack of money, or the lack of need to do a transaction were commonly cited reasons. Now, this gives us information that we can use. We were aware of these challenges. We are looking at identifying some of them and mitigate this problem of inactive accounts, how to bring them into the fold of digital payments. Apart from banks themselves, the banking correspondent arrangement we have, or the self-help groups that we have that have evolved can play a major role. We are trying to leverage on them. We also recognize that another way of dealing with that is coming up with innovative solutions. Reserve Bank of India Reserve Bank Innovation Hub had recently undertaken a competition to look at solutions. It was an internal thing to look at solutions that can meet the problem, that can solve the financial problems faced by women from economically weaker sections. And some of the solutions that have come out there are quite significant. Quite recently, very recently, the RBI Innovation Hub has come up with a KCC loan solution along with RBI, which will actually make it, probably completely change the way that these KCC loans are given to farmers. A process which would have taken weeks, if not months, obtaining a loan on KCC, under this system, we have so far done pilots, can be done in less than 10 minutes. What it requires is, of course, access to land records, access to cash flows, access to much of data that's there in many states, but that's not easily accessible, easily usable in some states. So we are trying to do it in a couple of states to begin with. Depending on its success, it can be extended. We look at that as changing the access to credit, not just of the farmer, but every user or every customer, whether it's a business or an individual in the rural sector. Another finding of the report that struck me was that large number of adults in South Asia, including India, are unbanked but have a mobile phone. Now, this is an interesting piece of statistics. 51% unbanked adults in India have a mobile phone. They don't have a bank account, but they have a cell phone. Now, this is both a challenge and an opportunity. The report also talks about the use of mobile accounts in Africa and how that can play a key role. But then what we have to look at here is, can we leverage the fact that those who are unbanked, half of them have a cell phone and can actually access the digital ecosystem? One way to do that is to ensure, and this is something that we have been working on for quite some time. Another factor is that of the mobile phones that people have in India, a fairly large number, I think roughly about 400 million or more, are feature phones. They are not smartphones. So UPI, as it is commonly used, cannot be used on a feature phone, could not be used on a feature phone. So with the, with the efforts of NPCI and with the efforts of, many private sector startups, etc., some of these have come up through the regulatory sandbox that we conducted. Some of them have come up through the, through the competitions that have been conducted by RBI or IDRBT or NPCI. But they have come up with solutions that, that can be used to ensure that UPI can be used as efficiently on a feature phone. There are many solutions. I think there were 3 to begin with. More are getting added over time. Whether it is interactive voice recorder or, whether it is high-tech solutions like proximity sound-based solutions, using sound that is emitted by the system to confirm, authenticate transactions. There are many such solutions that have come up. I think over time, as more and more of these feature phone users start using these systems, there is a simple one which which I call a missed call solution. Missed call is typically Indian. You give a call and then hang up so that you don't have to pay for the call. The other guy calls back. So that that is what is used here. You give a missed call to the merchant calls back, authentication happens and transaction happens. So other such, probably Dilip can throw more light on that. But there are many such solutions that have come up that will address this issue of entities who have a cell phone but don't have a bank account. While the efforts to bring them into the banking fold will continue, but this is something that could give us a solution in the interim or on its own. Another piece of data that the report brings out is that about 70% of account owners did not make a single digital payment in the period under review. Now, we fully appreciate that having a bank account is essentially a necessary condition. It's not a sufficient condition. However, it is also true that many digital apps that dot the landscape are not universal in reach. That not all of them can be reached. Apart from the solutions that I discussed that NPCI has come up for feature phones, there are other steps that we are taking to ensure that these people would also get covered, and digital payments development and regulatory efforts can focus on areas where it is not popular, areas where its use is sparse. One of the things that we are trying to do is basically, get this geo-tagging of digital transactions. which will enable us, it will actually tell us, what is the geographical spread across districts, across cities, across towns. That will help us focus our effort in areas where digital payments have not reached. We try to improve digital awareness through our various programs, the eBath programs and other awareness programs. We have a payment infrastructure development fund under which we have roughly about 1,000 crores now, which can be used to incentivize through subsidizing some sort of an infrastructure, whether it is POS machines or QR codes. So all these steps are also augmenting the efforts that are taken technologically to enable transactions by these entities that do not actually have bank accounts. One of the issues that comes up, and this is something that we need to keep in mind, that the fact that digitalization is growing at this rapid pace and the fact that we have such a large population makes India extremely data rich. Now, we do know that data can provide us solutions. Recently I was in a conference where one of the things many large corporates discussed with me is how can they access UPI data? How can they access UPI data? Because that will give information which can be used to structure products that can be specifically targeted at specific cohorts of the population. So being data rich is obviously a boon in the sense that new products can develop, but at the same time, being data rich also increases the responsibility on the government and the regulator and virtually all participants. Two things. Accessing data across one's activities affects privacy. All of us know that. The second thing is data means money. Data can be monetized. Therefore, data is significant to business, which is fine, which is as it should be. But at the same time, we will have to have regulations in place, primarily have laws in place, followed by regulations in place, which ensures that customer data is not only safe, that customers' privacy is not only protected, but the monetization of customer data is done in a responsible manner. It is done in a manner where the customer is aware, where the customer has some level of consent, some level of comfort with the use of that customer's data. I think I'll stop there. Just one other aspect that we at the Reserve Bank, we are a full-service central bank. It's not just not just payment systems or financial inclusion. We do these things across. We do regulation, we do supervision, we do many other functions. For all these functions, we realize that the future lies in technology. We need to focus on technology. We also need to ensure two things. We need to ensure that the technology ecosystem that we have understands what our priorities are. We need to ensure that we need to understand what the requirements of the technology ecosystem is. To ensure that this happens, we have recently set up a specific department targeted just at this function. We have set up a FinTech department whose basic job is to interact with all the technology, startups, etc., the entire ecosystem, understand what's happening there, identify trends, see what trends are useful for what purpose, whether it's regulation, supervision, inclusion, or whatever, and ensure that those technologies are given a fair chance to develop and evolve. So, we expect that given the fact that the future lies in technology, this initiative in particular will ensure that Reserve Bank's focus lies on addressing social problems like inclusion, as this report highlights, through the use of technology. Thank you.